We have chapter 9, accounting, correction of errors. It is important to know that the trial balance may balance and still have errors. These errors are said to be called errors that do not affect trial balance. So the point is, there are errors. Hello, you have to be here, please.
I'm listening.
The point is that there are errors that affect the trial balance, and there are some errors that do not affect the trial balance. So these errors that do not affect the trial balance will make your trial balance to balance, but at the end of the day, they are still errors. So it is important to find out those errors because they might reduce the profit of the business. That is why it's important to find those errors. So what are those errors that could affect that do not affect the trial balance? The first one, errors of commission. When we talk about errors of commission, this is where the correct amount is entered in the correct class, but to a wrong account in that class. So that means you've entered the right amount in the right class of account, but with a wrong account, individual account. That means instead of recording it in Latif's account, you recorded it in Latifa's account. That is error of commission because both entries are debit. You have done the right entry, but with a wrong account class. That means the name of the account is different. That is error of commission. We have error of omission. For error of omission, it means the transaction was not entered at all. So that means there's no debit or credit entry. There's no double entry system. So the trial balance will still balance. We have error of principal. For error of principal, the transaction is posted to an incorrect class of account. For example, an asset is entered as an expense or the opposite. So because an asset and expense are both debit entry, it will still make the trial balance to balance, despite the fact that those transactions are posted in an incorrect class of accounts. Then we have complete reversal of entries. For complete reversal of entry, this means a debit is posted as a credit and vice versa. So you posted a debit entry into a credit entry and a credit entry into a debit entry. The transaction will still balance. That is about complete reversal of entries. Then we have errors of original entry. For errors of original entry, that means there was a wrong amount entered at the initial stage. So because wrong amount is entered at the initial stage, the trial balance will still balance because you continue using the same value or figure for your transaction, so it will still balance. Then we have compensating errors. For compensating errors, here, this is where two mistakes for the same amount in two separate transactions have the possibility of correcting each other. So, for example, the ledger account for discount receivable. Discount receivable is an income account. It's overstated by maybe $100. And in addition, the ledger account, which is interest paid, is overcasted by $100. So there's an expenses which is overcasted by 100, and there's an income which is overcasted by 100. So the 100 because income has to be taken away from expenditure, so the account will still balance. So that takes us to explanation on journal entries. For explanation on journal entries, the first thing is it is important to know the following steps before correcting errors. The first one, we have to understand how errors are being. We have to understand how the errors arise. That means the origins of those errors, how they came up. We need to understand that. Two, we have to realize what their effect is on this financial statement. And when we talk about the financial statement, we're talking about the statement of financial position and the statement of profit and loss or other comprehensive income. The third thing we need to know is the step to take to rectify or to correct those errors. Then we have to understand if the errors must be found. We need to find the errors, correct them before we prepare our statement before we prepare our financial statement. Then, as soon as that is done, we try to check the additions of the trial balance, and if they are checked, the balance, then we have to check the individual accounts. So what I'm saying in essence is that as soon as we find out the errors, we have to calculate the total in the trial balance and the total of the individual account for like trade receivables. The total of trade receivables, we calculate individual trade receivable account. We calculate individual trade payables account. So the final figure must be equivalent to the trade receivable in the trial balance or the trade payables in the trial balance. So that's for errors that do not affect trial balance. That takes us to errors that affect trial balance. For errors that affect trial balance, I wrote, if the trial balance doesn't balance, the difference is recorded in the suspense account. So as soon as the trial balance doesn't balance, we need to prepare a suspense account. Preparing a suspense account means we put that figure in that account. Pending the time, we are able to figure out what the error is. So if the debit column is smaller than the credit column, then the suspect account is said to be in debit. And if the credit column is bigger than the debit column, or is smaller than the credit column, the suspect account is considered to be credit. So what are those errors that affect the trial balance? The first one, a single entry. When we talk about a single entry, it simply means that there is a debit or credit entry. There's a debit entry without a credit entry, or there's a credit entry without a debit entry. That would make the trial balance not to balance, because either the debit side or the credit side will be bigger or smaller than each other. 2. Entry to credit or to debit for a transaction. This will undercast and overcast both sides. So when we talk about entry to credit or to debit for a transaction, that means you recorded a transaction twice on the credit side, or you recorded a transaction twice on the debit side. It will either overcast, or it will undercast and overcast the account. Why? Because you have doubled, you debited twice or you credited twice. If you are debiting twice, it means you have overcasted, and if you are crediting twice, it means you have undercasted. The third one, entry different amounts for the debit and credit entries. So your debit entry for an individual for a transaction was 50, and your credit entry was 5. That means the trial balance will not balance. That's error of addition or subtraction. So the difference can be left in the statement of financial position, but students must not put it in the exams, as it will deduct marks from the exams. So the point is, whatever errors you find out in the trial balance, if it is in exams, you must not leave it in the suspect's account, or you must not put the suspect's account in your financial statement. You need to figure out the error and make sure that the entries are done correctly. Now go to statement of revised profit. For statement of revised profit, this implies to recalculating the profits, as errors would have changed the figure of profit. Why do we have revised profit? We have revised profit because as soon as there's error, as soon as our trial balance doesn't balance, or we find out or figure out that the trial balance has an error, it would affect the profits of the business. As a result of that, we have to revisit, we have to recalculate those individual accounts to ensure that everything is in order. Then that takes us, that's why we have statement of revised profit. We use it to recalculate our profits. That's about that. Then the next one, correction of errors in the control account. The errors in the for the control account, we have trade receivable control account, trade payables control account. So therefore, the errors in the trade receivable account and trade payables account might have been transferred into the current control account, as information in the control account originated from the books of prime entries. We do not have control account without trade receivable account and trade payables account. So if the trial balance does not balance, if the trial balance doesn't balance, then the control account will never balance, because it is assumed that, or it is expected that both trade receivable account and trade payables account has not been balanced yet. So if there are errors in the trade receivable account, it would have meant that there will be error in the control account. If the trade receivable account has an error, the control account, trade receivable control account will have an error. If the trade payable ledger has an error, it would have meant that the trade payable control account also have error. So that means it is important to correct control accounts as soon as errors are detected in either trade receivable account or trade payable account. So the point about here is that as soon as a business finds out or figure out that the trade receivable account has an error or the trade payable account has an error, it is important to correct the control account, because the control account will also have errors. That takes us to the activity 1. Here it said, Earl Green cannot balance her trial balance at 31st December 2018 and opens a suspense account for the difference. The account shows a debit of 140 in the suspense account. So that means the debit side of the trial balance prepared by Earl Green is smaller than the credit side. So that is why it's having a debit entry as the suspense account. So they said after checking this account shows a debit of that. So after checking the books, she discovers the following errors. So as soon as she starts reconciliating the account, she figures out the following. One, a credit note for 18, hello, please be here, and stop that already. A credit note for £18 was entered twice in a trade receivable account. When we talk about a credit note is issued when the business or the supplier feels that it is important to reduce the invoice. That is when a credit note is issued. So here, if a credit note of £18 was entered twice in a trade receivable account, it means you have to debit the trade receivable account and debit or credit suspense account. Trade receivable account, two debit has been done. That means the trade receivable account will be having an extra 18, which means the credit note has been £36 instead of 18. So that means you have to credit the suspense account to reduce the debit in the trade receivable account. So that's why you have a debit entry for trade receivable account for 18, and the suspense account will have a credit entry so that you can reduce the debit entry for $18. Then the second one, an invoice of 96 which was entered correctly in the revenue daybook was incorrectly entered to a trade receivable account as 969. So that means the trade receivable account has been overcasted by 90. So 96 minus 69. So that means you need to record 27 because the invoice was entered correctly in the revenue daybook for 96, but the trade receivable account is having a reduced figure of 27. So that means you have to debit the trade receivable account for 27, and you reduce it 27 from your suspense account. Do you get it or not, please? Do you get it or not? Yeah. The third one, a payment of 110 to a trade payable was entered in the cash book, but not posted to the trade payables account. So the transaction in the cash book was done correctly, but it is not recorded in the trade payables account. So that means the trade payable account will have the debit entry, and the suspense account will have a credit entry for 110. Then they said the return inward date book total has been overcasted by $90 or £90, sorry. So if the return inward has been overcasted by 90, that means customers have returned goods and the business has entered it more than $90. So that means $90 has to be taken away from the suspense account. So the suspense account will have $90 as a debit entry, and the return inward will have a credit entry. Why is the return inward having a credit entry? It's having a credit entry because the return inward has to be deducted. £90 has to be deducted from the return inward, which has to go to the return or to the suspense account. And the last one, two payments of £75 each were made to a trade payables, but only one was entered to the trade payables account. So if one was entered into trade payables account, that means the trade payables account needs another debit entry for 75, which has to be a debit entry for trade payables account and a credit entry for suspense account. Now, as soon as these are all the journal entries that we have to enter. The first one, there's going to be a debit entry for trade receivable, credit entry for suspense account. The second transaction will have a debit entry for trade receivable for 27. That's the difference between the invoice figure and the amount recorded for trade receivable for 27. So trade receivable will have 27 account or debit, and 27 as a suspense account. The third transaction will have 110 as a debit entry for the trade payable and a credit for the suspense account. Then the return inward will have a credit entry for 90. The suspense account will have a debit entry for 90. Then the last transaction will have a trade payable debit entry for 75, which was not recorded, and the suspense account will have 75. Then we have to add all the total figure in the debit entry together minus the overcasted account, which is 90. So 18 plus 27 plus 110 plus 75 minus 90 will give us our 140. So that ends the transaction for the activity 1.